Hello, everyone. Today we're diving into some hot-off-the-press financial news that's got economists and market watchers buzzing. We're talking about the latest Consumer Price Index, or CPI, report for April and what it means for potential Federal Reserve rate cuts. So, buckle up as we break it all down in a way that's easy to understand no matter your background in economics. First, what is the CPI? It's a measure that examines the weighted average of prices of a basket of consumer goods and services such as transportation, food, and medical care. It's a crucial indicator of changes in purchasing trends and inflation. This April, the CPI report showed a rise of 4.9% compared to last year. Now, while that might sound high, it's actually good news because it's a decrease from the previous month's 5% increase. This signals that inflation is cooling off, even if it's just by a little. Why does this matter? Well, inflation rates are a big deal for the Federal Reserve, the central bank of the United States. High inflation is like having too much air in a balloon. It risks popping if not managed carefully. The Fed combats high inflation by raising interest rates, making it more expensive to borrow money, which ideally slows down spending and brings inflation down. However, the recent CPI report suggests that the inflation furnace isn't running as hot as before. This cooling trend has led many to speculate that the Fed might ease up on the rate hikes, and there's even talk of a rate cut. According to the CME FedWatch tool, there's nearly a 50% chance of a rate cut this July. That's a big deal because it could mean lower borrowing costs for everyone from big corporations to everyday folks trying to buy a home. But the story isn't all sunshine and rainbows. While some areas of inflation have cooled, others, like housing costs, continue to climb, which adds complexity to the Fed's decisions moving forward. It's a delicate balance, keeping the economy growing without letting inflation run wild. And the stock market? It's feeling somewhat optimistic. After the report, U.S. stock indices like the S&P 500 saw a rise, reflecting investor relief that the Fed might pause its aggressive rate hikes, which have been putting pressure on the economy and banking sector. In conclusion, the April CPI report brings a mixed bag. It offers a glimmer of hope that we might be moving toward more stable economic times, but also highlights the ongoing challenges that lie ahead. As always, the Fed will need to walk a tightrope, balancing between curbing inflation and supporting economic growth. Thanks for tuning in, and make sure to keep an eye on these developments. Understanding these economic indicators can offer valuable insights, whether you're making personal investment decisions or just trying to gauge the economic climate. Stay informed, stay curious, and I'll catch you in the next video. Until then, take care.